Hey guys, mind over matter time, the psychology of trading, and I'm thinking D Cruz is already here.
Yeah, I'm here.
Awesome.
How's it going?
Good. How are you?
Yeah, doing well, doing well.
Awesome. Okay, got the recording going. And now I need to
All
look back
right.
at market talk and see if we have any questions before we kick off. Don't see anything. And we always try to pay attention to what people are struggling with and get a feel for, based on where we are in the market and how trades are going, what's a good idea to talk about. But as always, if you guys have questions, that's actually the best place for us to start is with questions from our members. And we do this every week, even though it feels kind of repetitive, because a lot of times we're talking about the same things: FOMO, greed, fear, you know, all the stuff that comes into the psychology piece as far as regular trading happens. But the more we can just keep hammering it back home that trading is mostly a business of managing your psychology and not letting your psychology manage your business. So I've been thinking that I was talking with somebody late last week, I think, and I said it, just sounds to me like you need to be very rigid with your rules and flexible with your expectations. And that's something that I talked about when I first came in to Bull Trades. There's a post in the pinned content in Psychology Risk Management that goes a little bit more into depth, but it was somebody who was adding to positions and not really managing their account, but using their emotions to manage their account. And so that whole concept of rigid with the rules and flexible with the expectations are what get us in trouble as humans across the board in everything. As far as I see it, our expectations of an outcome is usually what creates disappointment, frustration, all that fun stuff from an emotion perspective. So unsuccessful traders are flexible with their expectations and flexible with their rules, which is, so it's not a complete inverse. Any thoughts on that, D Cruz?
Yeah, that kind of almost fits kind of in the same realm, I guess you could say, or hand in hand with no bias almost. You kind of try to have no bias whenever you're trading, whenever you do. I mean, it tends to go against you, of course, automatically. Whenever the market's going against you, but um, I think it's always best to just trade what's given. But yeah, no, I definitely agree with that. Whenever you start to also just kind of give into whatever you're starting to see around what the other traders starting to think and trade, it you got to be really careful to who you're paying attention to and what um, really I guess what everybody's kind of saying, but realistically, you really would like to trust yourself more than anything. So.
And that's huge. The amount
Mhm.
of information you have coming in, even if it's multiple traders who are good traders, they're looking at different things, they're trading on different time frames, and it can be an issue. So you might have seen somebody very successful trading their edge and somebody else trading successfully their edge and thinking, if I follow both of them, except until it becomes your defined edge, you're probably not going to be as successful. So you really have to test and make sure that you understand why they're trading what they're trading and why they're doing what they're doing, as opposed to just following alerts, just following, something because you saw it on FinTwit. Do we call it FinX now? Does that change now that the name has changed? My husband
Right.
was asking me that last night. He's like, "Do you guys refer to it as X or Twitter?" In my brain, it's still Twitter, but I translate it to X now. But back to that whole concept of defined edge, it really all goes back to probabilities. And so five truths around probability mindset. Anything can happen, and this is from Trading in the Zone. You don't need to know what's going to happen next in order to make money. There's a random distribution between wins and losses for any set of variable that define an edge. Notice the key term random. An edge is nothing more than an indication of a higher probability of one thing happening over another. Every moment, keep in mind that your potential to experience emotional pain comes from the way you find the information you're exposed to. So how you define the information you're exposed to around your edge, for me, is the biggest factor, because it is individual at a very significant level. And you can see that when you listen to Thor and I on the Lunch and Learn. Sometimes the chart requests that we have from members are all, nope, won't touch that, nope, on to the next, on to the next. And we spend more time in that video working through that or talking through it so that members can learn from it. Where most of the time, if we were just looking at the chart, it would be click to the next. You know, you look at it for 1.5 seconds or maybe 5 seconds and go, nope. Even though a lot of times our thoughts are in alignment, they're not always. And so having that discussion and talking about those things is the whole goal behind the teaching piece that we really try to focus on for bull trades. And so I just really want to hammer that home of, you need to define your edge, and that is 100 trades as a sample size. And that's the challenge at the end of the Trading in the Zone book. If you haven't been through that, and I'm not just saying read the book, but if you haven't actually done the 100 sample size trade exercise that's there, and you're not consistently profitable, meaning month over month, you're profitable. Not, yes, I've made some money, yes, I've lost some money, but consistently profitable month and month, month and month. Maybe you have a down week, but by the end of the month, you're back up. Then that tells me that you need to stop trading your account and start developing that sample size cross test of what you have defined your edge as, if you have defined your edge. And if you haven't, you've got to start with that and then reinforce it or test it or pressure test it with that 100 sample size trade. And that can be done with market replay using TradingView. You know, you don't have to wait for 100 trades to show up, but making sure that you understand the entries and the exits and not just taking random trades, A, because someone else is, B, because it seems like a good idea and we're at all-time highs, so we definitely should sell off, or vice versa. This is sold off a bunch, so it should bounce kind of philosophy, but really making sure that your TA that you're using is something in that random probability or random distribution between wins and losses. You understand what your win rate and your loss rate is. The Trader Forge program that we have inside Bull Trades, it's actually a free program to everyone, but the instruction piece, because it's a pretty in-depth amount of data set that goes into it. All of the instruction pieces inside its own category in Bull Trades that will really, it seems like a lot of work, but I can promise you, once you start seeing that type of information generated, don't trade at 10:30 a.m. Don't trade at lunch. Don't trade at, you know, these are where my losses are. These are where my bigger wins are. Do I need to sit out longer? Do I need to, you know, this information is going to help you understand for you what you need to be doing, not for someone else, but for you. So making money is not as complicated when you're trading, as long as you understand that it is a random distribution.
Yeah, that's really key with, you know, whatever I'd like to preach and whatever we'd like to preach, and whenever we say the other half of it is avoiding losses and controlling losses. So, you know, whenever the plays would validate, make sure to cut those and just make everything, you know, sized correctly to where, you know, a few bad trades aren't going to go fully against you and, you know, blow your account or blow a large portion of it. just accept that also, you know, there are slumps. You know, you're gonna have a few days where you lose typically more than you'd like to, or typically than you more than you do in a week. But whenever that happens, it's really key to kind of just sit back and really trader view is what gets you out of that. See where you're, you know, where you're not respecting your rules, or see a consistent pattern of, you know, a possible little small mistake that could be impacting your trading, or maybe just a little bit of impatience, or maybe hesitation. So it's a little
Well,
bit of
it could be
just really
outside
just
stresses
reviewing.
even, right? So it could be
Yeah,
nothing to do with like you're trading well,
yeah,
things are
no,
going
yeah.
great, and something else outside of trading
Something
entirely,
in your
family
yeah, in
stress.
your life is bothering you and you
Yeah,
can't fully focus on the charts. Yeah, no, and then you start to get, I think that that's where you get
it's
impatient. Or
huge.
maybe you know, you're just like, oh, I can't trade. I'm going to stop out of this trade. And then boom, it goes your way. And then you're just sitting there like, wow, I could have held it. But, and you're kind of thinking why, but it's just you're too focused on something else.
Right. And learning how to sit out those days is not a bad thing at all. So if you're not able to, you know, fully focus and really be engaged, especially as you're learning and you're not, you know, like you have to be really solid on your TA. That stuff, you've got to get that stuff figured out. And I know we talk all the time about 80%. For me, it's 80% psychology trading is, because you can learn the TA pretty well, but you have to have learned the TA. And for some people, it takes a couple of weeks. For some people, all over the place, adding different indicators, looking at different things. They're chasing the next set of bands or cloud or whatever. And it ends up being so much information that they can't really quantify, that then it ends up kind of clouding the whole picture. So making sure that you understand what's on your chart, and each of us are going to have different looking charts because we're individuals, but being able to quantify the data and be able to be fully present. If you're not able to be fully present, you can't even quantify the data, even if you've been doing it for a while. So really important that when we're looking at probabilities, that you're able to be fully present in your trades. Because it's always going to go back to capital preservation. If you really should not be thinking about how much money you can make. You should be thinking about how much money you can lose. And if you focus on that, you're less likely to take those impulsive, addictive kind of behavior pattern trades where you like, I have to be in a trade. Market's open, I've got to be there. If your trading is an addiction instead of a business and you haven't identified that yet, I mean, I guess it's a good time to just sit back and ask yourself that question. Am I managing this like I would if I owned a restaurant? And each of those trades are your individual employees, or each of the accounts are your individual food service items, whatever. Stepping back and really thinking about it, taking it into a different perspective or a different frame of thought can make a huge difference in how you're trading, and definitely not running things based off of like a casino or like an addiction to gambling or something else. And ultimately for me, what it always went back to was I need to change what this financial situation is for my family, not just for me. I'm changing how I think about things for my kids. So, as a lead from the front kind of perspective, what I change about myself, they see. And hopefully, because I wasn't given a very good or hardly any financial education, hopefully they're going to do much better. And both of them have fairly sizable savings accounts as late teens and early 20s because they've understood the power of compounding and investing and really using a delayed gratification kind of scenario in their thought process instead of, I want to do it now, I want to do it now, which that impulsive behavior is really the ruin of most people's financial situation. So, really thinking about who are you doing this for beside yourself may give you some more self control, some more insight, some more pause in some instances.
Sorry, I was just replying to something here. What was that?
Oh, just thinking about how it doesn't just change your account when you're learning how to trade and manage your accounts well, but really looking at how it will change the future of your family tree, how it will change what your kids are exposed to. Both my kids have significantly more money in their savings accounts from their jobs than I did at their ages. And it's because they watched me change what I'm doing, what my behaviors are from the time they were little into their adulthood. So it's really cool. It's neat to not just be focused on yourself, and that's the reason I'm here, taking the time to do the psychology and the trades and all of that, is so that hopefully it's not just my family tree that's changed, but other people really can absorb what I wish I would have learned much younger.
You know, I agree with that. Um, Changes the perspective on a lot of things. You know, you respect capital a lot more elsewhere, I've noticed. So that is a good thing. Um, we do have a question in Market Talk from Moose. So I'm live right now. How do you get over losing funded accounts? Was super consistent for 4 months, very close to a payout, had an 8 trade losing streak, and took on too much risk yesterday and lost the funded accounts, which messed with my head.
So too much risk. What is that? How is that defined? If I've
Yeah, I
got
would.
if I've got 8 trades in a row losing, well, first of all, if I've got 3 in a row losing, I'm out for the remainder of the day. 3 in a row. If I'm out for the remainder of the day and the next day opens and my first trade is a loss, I'm going to think very heavily about trading that day, because that tells me that time away from the screens didn't change anything. So that would put a pretty heavy at 4. Maybe I sit out today. So 8 trade losing for me, I at 4 or 5 in a row, I'm like, there's something wrong. I'm clearly focused on something else, and I don't think I'd let it get to 8. So that would be my first suggestion, is maybe after each trade, whether it's a winner or a loser, you sit down and, write a couple notes. This is trade number 4 that's a loss, or this is, find something that can pull you back in, even if it is a win. I traded this well. Then we get on a euphoria. And then are you thinking as well?
He's saying that was over a few days.
Eight,
So
8 in a row
that,
over a
I
few
think
days.
that with
Okay, was it
yeah,
over?
I think that with a couple of whenever you're starting to see, or whenever the price actions are hard to see for like 2 or 3 days, I think it's really cute to sit out for the remainder of the week. I mean, bad weeks do happen, especially whenever you're um, really just learning and getting your strategy into play and testing everything thoroughly. But usually, whenever I stop myself out one day, I'm a little bit more
Yeah.
patient the next. And then if that's the case, then I probably won't. I might sit out for a day, or maybe just take one trade max the next day. But I've been there. I mean, it's a lot easier also with prop accounts. But just yeah, I mean, we learn from our mistakes, and maybe we just gotta
Yeah.
keep on
So he said he was
keep on
trading
keeping on
5
with it.
ES contracts on the 150K account, and he usually trades max 1. So that's
Oh, yeah, so
definitely, I
that's
mean,
what
that's
we're
adding
focused
to
on.
losers, that's oversizing all the stuff we talk about. And the thing you have to remember is they have their max limit set at what, 17 on that size of account, because their business is not your business. Their business is making money off of you having to get a new account. And yes, they make money on you when you're profitable, but you have to use the self-control of not going in at that level until you've built a much larger cushion on your 150K. You want to make sure that you're still staying smaller. And so I guess the biggest question that I would do from a journaling perspective is sit down and really figure out why you normally had max 1 and you went to 5, because that's a huge difference. That's a difference between like 5% on an account and 25%. If you think about it from that perspective, huge difference. And you probably somewhere in the back of your head know that. maybe something was distracting you, or maybe you were frustrated in general, not even related to trading. I don't know. It was a huge loss of confidence, he says, so impulsively messed up. Yep. So that's why, if you've got 5 days, if you've got eight losing trades over 5 days, was it 8 consecutive? Yeah, 8 trade losing streak. So over 5 days, if 8 trades are lost, well, if I, like I said, if I've stopped myself from trading for one day and come into the next day losing one trade, I'm really cautious. I've got the like, this feels like a trip to the spanking machine, and I use that term a lot of, like getting yourself in trouble. By the time you've got 5 days of losing, you need to size down. If you've got 5 days of losing, sizing down, come in with like 1 to 3 MES contracts and rebuild the confidence, because going from 1 ES contract to 5 ES contracts when you've got a 5-day losing streak already, it becomes impulsive. It becomes that desperate have to save this kind of thing, and that's revenge trading. Especially when it's already been established for 5 days that something's up somewhere, somehow, and it kind of becomes a self-fulfilling prophecy when you've got your confidence derailed in that kind of situation. Sizing down is always the answer, not sizing up. One MES, and then you're mad because you saw it right and you didn't make as much money as you should have, but it starts to rebuild you. It takes you from 8 trades losing to now I've got one that like, okay, I'm starting to feel a little better now about how I'm seeing things. And that part's really important. So sizing down is always the answer, especially when you've got a multi-day losing streak. Because you do have to go back to trading eventually, but not at 5 times what your normal size would be. Was it something that you added to a position that you had 1 and then added to the position and ended up taking it to 5? I guess that's a kind of a moot point because all the other stuff applies way more than that. But if you didn't just like slap the ask at 5, that also gives you some indication. And my alarm is very loud. Little checks and balances, I think, are the biggest thing. Jotting down notes. So he says he lost a lot in a row, so I was trying to do the opposite of what I usually do. Okay, so your game plan, and this is not just for Moose. And Moose, thank you for, being like honest and vulnerable enough to post about this, because I can promise you, you are not the only person in this situation. Other people just aren't talking about it. So this allows us to be able to teach and help you guys grow. So kudos to you. And that shows that you probably, if you can take the elbow grease to dig into this and work on it with yourself, is always size down when you've got that much confidence broken, and then build your confidence back up. Sometimes it's where we are in the market. Sometimes it's where we are mentally, personally, whatever. Physically, you're not at the right station where you're used to doing your analysis, all that fun stuff. Some people that really throws them off. There's some people who, kind of like athletes, they have their special pair of socks or they have their special coffee mug, which is, very individual, but figuring out what caused the 8-trade losing streak is going to be really important, so that the next time you come anywhere near that kind of situation, you can put a stop loss on yourself, on your trading habits, so that when you do come into that second day, you've already had 3 or whatever, you've had multiple days of losing trades right in a row. I'm going to size down. So you might need a note for that. I'm sure there's some other people that also need a note. Sizing down is almost always the answer. As you develop more consistently profitable trading skills, knowing when to size up, knowing when to go big, is a skill that will be developed much later. much, much later. That preservation of capital and small, consistent gains is what the focus of anybody should be if they're finding themselves struggling.
Yeah, I agree. The key from that is sizing down and gaining the confidence back. You're not always going to be in the groove. If that was the case, this would be too easy.
Right.
You're going to have slumps just like anything else in life. You're looking at the best NBA player, best uh, MLB player, best any player. They're not perfect. Nobody's perfect. You're going to have these slumps. It's just, recognizing them and, just trying to manage them, if you will, just keep them manageable, control them, and just learn from them. And, you just size down a little, gain that confidence back in your groove, and then you'll be back.
Yeah.
It's just how it goes.
He had a follow-up question to that. Were you ever in a situation where you lost a lot and were not able to trade normally for the next few months? Getting new accounts is going to take months, but that's life. The answer is yes, to the tune of a lot. And Thor just posted about it in Market Talk. Both he and I lost a lot. And it wasn't, I don't know that, I'd have to go back and really look at notes. Months, not trade normally, for, I guess, let's see, not able to trade normally for the next few months. I will say that when you lose a huge amount of money, take large drawdowns, it breaks your confidence so badly that then you move into the fear phase where you don't take trades because you're scared to lose more money. And that's that self-fulfilling kind of, it gets you in trouble. So that's where I wholeheartedly had to learn how to size down because I kept sizing up. I've definitely been where you are right there. So I don't want you to think that I'm saying, oh, I've never done that. It's not going to work out for you as a trader. We have all been there where we doubled down, where we increased our position sizing, just trying to salvage something. And I think it's all part of the learning process. But we want to try to shorten up what your learning process is, AKA, please try to learn from us. Size down. Always size down if you're not sure if you're seeing the market clearly. Because it is hard not to trade after 5 days. You're like, there's surely going to be a setup, one of my setups in here. But if it's 1/10 of the size of position or 20%, much smaller, if you have to stop yourself out because you're managing your trade well, it's not as damaging mentally. It will still be damaging once you've already taken that many cuts. You're really sensitive, right? It's that whole lemon juice on the cut. The cut was already there, that already kind of hurt, and then you got lemon juice on it, and it's even worse. The losses are the market's indication that you're not paying attention to what you need to pay attention to, especially with that many in a row. So the sizing down lets it hurt less as you're still trying to figure it out. So let's see. Moose says, Cedar, is the next step to try to grow a live account or keep trying with prop firms? That is a really hard question for me to answer for you. So I would heavily recommend, if you have the capital to be able to put a couple $1,000s in a real account that you're funding and trade one ES and prove to yourself that you can build that up, you can actually turn that into some pretty decent capital. And you can set risk settings. If you're using Tradovate, you can actually set it up where you're not allowed to trade more than one MES contract, period. And that's one thing I really don't like about the prop firms. While I've moved, some of my trading capital onto other things and using prop firms to replace those trading positions, it is very dangerous for traders who are not very calculated and very specific in how they're executing, because you can't set risk parameters like you can on a real live account. And that's huge. So it's not like I normally trade one ES and now I just accidentally did it because the account would allow me to. Tradovate will actually allow you to set those parameters where you absolutely cannot, period, overtrade. It'll make you mad, but it might help you develop some more calluses to, oh, stopped out. Oh, like there's my daily loss limit, that kind of thing. So he says he can probably get a five-figure live account because my swings for options saved me. I have at least 5 figures in a live account, trading account, better than prop firms. You're so right, by the way. I really wanted to set a $300 daily loss limit. Yeah, so it sounds to me like you've got the capital to go set up a live account and set your daily loss limits and set your max position sizing on that account. That may be the better answer for you because of the risk settings that they allow you to do that the prop firms do not. I have an appointment I have to run to. I'm actually a couple minutes late now, but I love these questions. So this kind of stuff, guys, makes the biggest difference where we're actually answering your questions and frustrations. And it's you, but it's also probably 100 other people listening as we're in a live setting or going back that, they'll listen to it later. And it helps them while you're helping you. So thank you.
Yeah. Oh yeah. Thanks for the questions, Moose, always. And thanks for everybody being here listening.
Yeah.
But
Favorite part of the whole week.
Yeah.
And I'll
You know
get
where to
this
find us
recording
online.
set up. So if you happen to tune in a little bit late, you can go back and listen to it. But it's definitely a good one if you're struggling or just blown a prop account or just struggling in general. I think, yeah. Awesome question. Okay, we'll catch you guys in a little bit.
Cool. Yep. We'll see you soon.